So day trading strategies for changing market conditions and behavior. So an instrument will go through stages of trending. It'll be in a tight range. It will burst out of that range. There's lots of different behaviors for a specific instrument, and one strategy alone does not enable traders to trade that correctly. So what I did over the last 10 years is actually try to make life simpler for myself by developing technology to allow me to trade those different market conditions. And predominantly I trade copper. I'm married to copper. I understand the behavior. So let's go through and discuss a couple of days in the life of copper. So this is a copper chart, 3rd of April 2024. It's on the 5-minute Heikin-Ashi chart, something I use quite a bit. And when you've got a blank chart, it's very difficult to understand why did this move, but when this moved it didn't continue, and you didn't have that drive, that directional flow with strength. When you've got an empty chart like this with nothing on it, just price action, it's very difficult to understand. And this is where guesswork of some day traders come in, because they simply don't use a strategy to identify those particular instances when we can actually take those high probability moves. So what traders need? They need strategies that produce signals in different market conditions, but then signals from different strategies that are in confluence to show increasing strength of directional flow. So if you've got signals from two different strategies that for different market conditions that are both saying go long, then there is an increase in directional flow. There's more impetus to a certain direction. Then we have some very simple rules, and I probably say this on a lot of videos, but I'm still going to repeat it because these are the rules that I use. It doesn't matter which signal in which strategy you're using, you get a signal, but then you need to confirm that signal. You need then fresh air for that signal to trade into. So then we're going to go through that same chart now. This time I've added some technology to it. Okay, the technology that I have designed to make my life easier. So first of all, we're going to start right on the left of the chart. We're going to tell the story. So we have at the bottom we have a bias depth heat map. That is for our confirmation. You'll see these 5 and 6s on the chart here. This is called the expert algo, and so a 6-star buy, for example, is 12 out of 12 points of control. So a confluence of 12 different indicators saying, hey, go long or short. 5 is 11 out of 12. And then you'll see these different colored lines on the chart here. This is our Guardian zones. And so this is the NinjaTrader platform. Most of our high-powered technology, like the Guardian zones, is only on NinjaTrader, hence using this platform. So these are multiple time frame support and resistance zones. So we're on the 5-minute. The 15-minute resistance and support zones are in cyan. The green is 30-minute, and the pink is 60 minutes. So you can see at the bottom here we've got a big confluence of 30, 60 and 15-minute zones there, really, really strong. We have a confluence of 15 and 30 at this point here. So this allows and identifies the fresh air to trade into. So let's start on the left. We get a 5-star sell signal here, but we don't have the confirmation. Look at the bias depth heat map, red, yellow, green. If we were going to go short, we want it all red. Plus we've got this big support zone under here from different time frames. We're not going to take the trade. Next we have a 5 and a 6-star buy signal. All 6 time frames here on the bias depth heat map are green. We're looking good, but we haven't got the fresh air to the next resistance zone. Even though it did push through, there wasn't enough force there. Remember, signal confirmation, fresh air. Look what happened. We then got another signal on a 6-star buy here. Signal on its own is not enough. We've got the confirmation. we've got no fresh air. We've now hit that confluence of 15 and 30 minute, and it pushes back down again. More importantly for me, that push down actually comes physically to test that confluence of 60, 30 and 15. Really strong. Now I'm looking for a signal. We get a signal at this point here for a 6-star buy signal. Okay, we've got the confirmation, we've got all 6 time frames in green. However, we've got this 15-minute zone up above. So what I did here, a stop for this type of trade would be just below this zone, and the entry, even though we got a 6-star buy at that point, we'd put a stop market order on to go in when it breaks that particular zone, and we got a risk reward of 1 to 1.6, which is around about my minimum. So we've got fresh air, so we take the trade. So we're in the trade. The next thing is we're getting these pullbacks. Most traders would panic on these pullbacks. So how do we manage the trade? So you see the green ribbon here. This is part of the manager, and that green ribbon remains green during those pullbacks. So basically it's telling us to stay in. We've got some dots up above and below the candles here, and I'll go to that on a different slide here. But also now we're managing the trade. What about opportunities to add contracts to this particular trade on those pullbacks? It's a different strategy to the expert algo, but we have a strategy to do that as well. This is called the slingshot. So imagine a slingshot is we get momentum pushing up, it pulls back, and then it slingshots in the same direction. And that's what the slingshot's for, to measure those pullbacks and give signals to go long. You see in this middle one here, there was no signal because it didn't meet the rules for the algorithm, even though it continued to go. So let's start right back on the left and do this same again. So this was the original expert algo entry at this point here, where this green arrow is here. But also see, we've got a 3-star buy signal at the same time, just as we're pushing through this 15 minutes resistance zone. The 3-star buy signal from the slingshot is actually a trend failure signal. So we've got a confluence of signals from both the expert algo and the slingshot. Totally different strategies, both saying go long. Okay, so when we've got those on 2 different chart sets on our monitors, we'll say actually good confluence there. This has backed up my theory with that 6-star buy. I've got that that confirmation with all 6 time frames there. I've got fresh air. We just talked about that on the last. I'm going to go long. Then moving forward, we do get a pullback when it hits this 15 and 30 minute confluence zone. We get a type 1 buy signal, but we've got no fresh air. So we're going to ignore it. We're going to stick to these simple rules: signal, confirmation, fresh air. We then push through this last 15 minute zone, pull back into our pullback zones with the slingshot, type 1 buy. All 6 time frames are green, lots of fresh air. We add to our trade, we add another contract at that point. Look at the momentum then after we release ourselves from that fresh air, goes all the way up. We then get another pullback. All 6 time frames, we've got the confirmations, we've got a signal type 1 buy, we've got the confirmation, we've got fresh air. Let's add another contract going into the close. So at that point, a lot of funded traders, for example, would have to close that out as we're going into the close of the session. Fantastic trade. By the time you're into that trade, you're on 3 contracts if you started with 1. Now, for those that are like me, that are not funded traders, that just trade money, we can actually combine that manager that we talked about in that first instance, or this trade management line printed by the slingshot to continue that trade all the way into the next session, the overnight session. So there are some fantastic opportunities there. So the next day, what's happening on the next day? We've got different market behavior on the 4th of April now. It's a bit scrappy. We've gone very flat overnight. And one thing I like to do with copper especially is trade the London Open. I like to break out. So the previous day, we didn't have a trade. Okay, we had other opportunities with different market conditions, and those strategies worked. Today, we had, on this particular day, we had the London Open, so we measure that range of that first 10-minute candle, and this is a 10-minute time frame, and we define that range and we define it in a color. So if it's green, we're only looking for a long breakout. We've got the signal, we've got the confirmations, all 6 time frames are green, we've got fresh air, we take the trade. Okay, it's a bit scrappy, and what normally happens is we do pull back and test that opening range. That's good. Our stop's below this previous pivot, not a problem. Comes to test, it rejects those lows on higher than average volume there. But when we get out is up to the manager. I'm going to just make this little bit here a little bigger. We can see this cyan dot above the candle at this point denotes higher than average volume. So these highs on this candle were rejected aggressively with higher than average volume. And this is a sign that the price is going to turn back down again. So this is the manager saying to you, flatten your trade right now. So it was a decent trade. It was, usually we get about 25 ticks on an opening range trade. We then move forward and we get the New York Stock Exchange open, but this time we reject those lows on higher than average volume. The bias is red and yellow. There's a neutral bias because he doesn't know the direction. But what interests me is that we get, during that 10 minute of the New York Stock Exchange open, that first 10 minutes on copper, we reject those lows with that sign dot there, higher than average volume. So now it doesn't look like it wants to go down at this point. It wants to go higher. I need to switch to a different type of strategy at this point because it's not meeting the criteria of the range breakout. Now is the time to switch to a different strategy. And this time we're going to look at the roller coaster. So the roller coaster enables us to trade when we're in a range or eventually when we break out of those ranges. So I'm going to talk through the expert algo now. So this is the same point in time for the New York Stock Exchange open. Again, remember we had a totally mixed bag of red, yellow, green on the biased heat map. So there was no confirmation for this roller coaster signal. You can see we have the green arrow there. The little green line where my cursor is, the horizontal line, is the entry point. It was a winner. It's the same time as there because that's a trading stop that's being printed for the roller coaster. It did find initial resistance at that 15-minute zone. But we got to follow the rules because if we don't follow the rules, yes, they're little winners, but they're not what we need to fulfill our continual trading sort of progress with the same instrument. Because if you just trade one instrument, you understand the behavior very well. You just use different strategies to trade as that behavior changes. So then we actually get a sell signal at this point, little red arrow there, little green line, but again, we don't get the confirmation. We don't take the trade, the signal fails, okay? No signal is 100%. You always need to confirm the signal. The bias depth heat map is a perfect tool for that. Moving along, so even though we got the fresh air for that signal, we've got no confirmation. So 2 out of 3 is no good, okay? Now we get the price action testing the top end of this. Basically, the price action since the 3rd, and we've gone into the 4th of April, you can see down the bottom left of the chart here, it's been going up and down in a range, and this is why that roller coaster is perfect for that type of behavior. When we test the top of that behavior, we get a signal short with this little red arrow here, but we haven't got a lot of fresh air down to that 15-minute zone. But as we're pushing through that zone, we've got enough fresh air to the next zone, and 5 out of 6 are on red. So for me personally, this is why I designed it, when I'm using the roller coaster, 5 out of 6 all red from the top down is sufficient for me when I've got the fresh air to take that trade. And then the trading stop comes all the way down at this point here, and it takes us out as it tries to push through then the roller coaster motion of that price action tries to come back into that range. And imagine this price action like a roller coaster getting to the top of the next run. It's a lot low and it starts to come back down again. This time we get another short signal on the roller coaster and we get all 6 time frames are red this time. The signal actually is in that zone, so we're going to wait for it to clear. We've still got lots of fresh air. We take the trade and it comes all the way down. Takes us out with the trading stop at that point there. So again, different market conditions from the previous day, but we're using different strategies and technology to trade those different conditions. So for me, I have equivalent to 8 different 27-inch monitors. So when I'm trading copper, I have a different chart set. And sometimes I combine those strategies on there, but I try and keep them really clean and just have one chart. I buy steps, heat maps on there all the time. But with its X-spread algo, roller coaster, range breakout, different chart sets, so I can understand, because they're all on different time frames. This is a 150 tick Heikin-Ashi chart, which is hot for copper right now. Okay, do we take that return leg up? No. Why? We don't get the confirmation here. Okay, we've got a long signal. We're green, yellow, and red, so we're not going to take that. So again, just to confirm, lots of fresh air on that particular signal there. So technology allows for simplified decision making. So we can see on the left here this box of 4: X-spread algo, roller coaster, range breakout, X-spread slingshot. They're all signal providers for different market conditions. I'm going to put the links for all these down below for the NinjaTrader platform. Also, if if you're watching this and you don't have NinjaTrader, NinjaTrader is the most powerful platform, but we do develop most of these for other platforms as well, except for the Slingshot and the Guardian Zones. You'll see my face here is half robot, half human, because when we're trading, we need to follow the rules. We need algorithms, we need a robot to actually follow those rules and say, this is a signal. Then do we get confirmation from that robot? Yes or no? Do we get fresh air? Yes or no? Very, very simple. Signal, confirmation, fresh air. Hopefully that helps, and I'll speak to you all really soon.